Hello, what's going on, viewers? My name is Chris, and in this video we're going to talk about using the trailing stop order type in the Interactive Brokers Trader Workstation software. In this video I'm going to show you how to use various types of trailing stops, including trailing stop limit order types, and I'm going to show you how to attach them to an existing trade, as well as how to use something called an adjustable stop, where once a trigger price is achieved, you can turn a regular stop order into a trailing stop order, or you can change the trailing amount on an existing trailing stop order. In this video, I'm also going to give you my thoughts on how useful I think trailing stop order types are in today's markets. I've been trading since 2018. It's quite a while. And I'm at the point in my trading now where I have certain established systems of trading. And I will be honest with you guys, I do not use the trailing stop order type in my own trading. I'm mostly discretionary with the aid of a few algorithmic order entry and exit techniques that help me to execute orders faster, though I do not use trailing stops. That does not mean I will never use them, because I might reach a day where I might think that the trailing stop would be useful for a particular market environment that we might be seeing. The first thing is that everything in this video is for educational purposes, showing how to use the software, and it is also my own opinions. It does not reflect the opinions of any specific broker or any other entity. Trading futures, options, stocks has a lot of risks to it, and you must carefully analyze and understand the risks that you're taking before you undergo these risks. If you are new to using any of these order execution techniques, it is very important that you use a simulated trading environment. The Interactive Brokers paper trading account is perfect for testing these order types. So definitely do that testing before you put it in a live account. If you would like to support my content, if you appreciate the work that I put in for you guys, check out Interactive Brokers using the first link down below. And I really appreciate it when you click on that link, because it will support the channel. And Interactive Brokers is a broker that I fully recommend for international clients. I'm in Canada. I've been using this broker for a number of years now, and you can check out my 4-year review of them if you want to see that, where I talked about some of the pros and cons. And overall, I think Interactive Brokers is a very solid broker if you're inside or outside of the United States of America. So let's talk about them more. I often get a lot of questions from viewers about using trailing stops, and I think that this topic in general is a highly requested topic among newer investors. Because the idea of the trailing stop, I'll explain to you what it is. So I buy the market here, I put a target up here, and then I put a stop down at 529 even or something like that. And then as the market moves in my favor, my stop loss is set to be a trailing stop with an offset of, let's say, 25 cents. What this means is that when the market moves in my favor, meaning it's going up because I bought some shares at 529 and 30, every time it goes in my favor, the trailing stop price will adjust to be 25 cents below the current market price. So it'll constantly adjust as long as the market is moving in my favor. Now, when the market stops moving in my favor, when it goes the opposite direction, the trailing stop price does not move its price. In fact, it stays at the new modified price. So in general, the point of this order type is to protect open profits. So as the market moves in your favor, the stop loss goes up and up and up, and it follows the market until finally the market reverses, and it will trigger your trailing stop order type, which aims to get you out of your position, hopefully for some kind of a profit. I want to give you guys a few different reasons why I think this is maybe not so useful for different styles of trading, and it may be useful for other styles of trading. Now, right off the top of my head, I think that the trailing stop could be useful if you're doing very, very fast trades, and more specifically, momentum-based trades, like breakout type trading. Now, what I'm saying here is only my opinion. It's based on what I've seen in the markets and based on my understanding of the markets and how I perceive the markets after all these years. I've been trading since 2018, and I'm currently at a stage in my trading where I have multiple established methods of trading the markets. Where trailing stops could be useful, in my opinion, is if you're running some sort of an automated trading system that is very quick and it is momentum based. So if you're scalping, say, futures or options for, like, say, 5 to 10 ticks at most, or even less than that, I think that the trailing stop order type could be something you might want to consider. because any of you guys who've watched the markets for a long time, you understand how fast these markets can move. You can be in a trade, you're filled on the bid, then it goes 5-10 ticks in your favor. You may have been missed on your target order, and you want to get out in the case that the market reverses. You want to scratch the trade for a potential break even or a 1 or 2 tick profit in the case that it moves against you. Because a trader that trades on that type of short time frame, I would say normally it's part of their trading strategy to be able to scratch and re-enter the trade multiple times if necessary. And what that will typically entail is a lot of break-even trades or small profits or small losses before they end up in the trade that they got the good entry and they're letting it ride a little bit longer. You understand what I'm talking about? I'm gonna be straight up with you guys. Most traders don't trade that way. Most traders, most retail traders, and also a lot of institutional investment strategies, I would say, are not super short term like that. I mean, there's so many different ways of trading the markets. People trade for longer term swing trades. People trade intraday positional trades, meaning that, you know, they might have about 3 or 4 different entry points that they're willing to accept before they decide that they're in a bad trade. They're letting the market give them more information as time goes on. And what this also means is that because they're letting the market give them more information, and some of these more experienced traders have more experience about reading price action is something that all investors, traders should have some sort of an understanding about. I personally believe that price action, which also relates to the concept of auction market theory, if you study markets for a long enough amount of time, you'll often see that markets move in ways where they will typically sniff out any trailing stops or stop loss orders. And once the market has become exhausted on one side, it now has the necessary fuel to reverse and go to the other side. Now, depending on the strategy of the trader, they may not want that. They may want to give the trade more breathing room to play out, understanding that the natural price action of the way markets operate typically there's a lot of back and forth, meaning that there's a chance that the market will pull back to trigger any stops that are lingering before reversing again. And I think that this is the natural way that markets trade. And of course, this is not always how markets trade. Markets sometimes can be very one-sided and very directional. You can't just show up and say, I'm going to use a trailing stop every single time, because I personally think that would be considered, in the algorithmic trading world, there's a word called overfitting. What it means is you're trying to put in your specific set of parameters, like entry at this price, target at this price, stop at this price, trailing stop by 25 cents. You're putting that rigid formula on a market that is not rigid. Markets are not rigid. And the price action of markets oftentimes is counterintuitive to some of these very rigid algorithms that you might use, like trailing stops. I would say this year, 2024, there's been a lot of back and forth in the markets, in the commodity markets too, in crude oil, in S&Ps and NASDAQ, which actually would be something bad if you plan on using a trailing stop. The market changes all the time. It's very dynamic. Sometimes we have high volatility, sometimes we have low volatility, sometimes the market is trading in a range, sometimes the market's trending. So if you always approach the market with that type of rigid formula, understand the trailing stop order type on itself is a rigid order modification strategy that uses a specific offset, and it's designed to follow the market by that amount every time. So if you always use the same amount of trailing, you're bound to be leaving money on the table in the long run, because you would not be adjusting to what the market is doing. You would be overfitting a particular formula into an environment that is not as rigid as the formula you're trying to put onto it. So if you think that the trailing stop alone is going to be what makes you profitable or what improves your profitability, I would say you're dead wrong. Because there's still a big discretionary aspect involved with how far away your offset is for the trailing stop and why you're deciding to have a greater or a smaller offset amount for the trade. So it's really not black and white. And I would say if there was one mistake that new traders make more than all the others, it's the fact that they think the markets are rigid, that you can just put these arbitrary algorithmic formulas onto a market and expect them to work. Or they might actually work in backtesting, but understand that not all backtesting environments replicate what the real market does. It's very important that if you're using backtesting and testing trailing stops, that you're using it in an environment that is realistic or close to how the markets trade and how real orders are actually executed. This is quite difficult to find, but it requires careful engineering when it comes to developing your backtesting environment. So what I'm trying to give you guys is some realistic expectations as to what you should expect when using a trailing stop order type. And the fact is that the markets a lot of times move in a way that will sniff out trailing stop order types. They will sniff out stops. And you guys who've been watching my videos for a while, you already know this. You guys are experienced traders, you know what's going on, you know how the markets work. Price action is the #1 key word, price action. What is price action? Study what price action is. In my opinion, it basically relates to the concept of auction market theory, which is how prices move, how markets move, why do prices move the way they move, supply and demand concepts as well. So if you're ever wondering why the market always moves away from your order as soon as you place it, or why the market will stop you out and then reverse, just understand that that's by design. This is how the markets work. It's part of the game. You have to embrace it. I love the way markets work. I love price action. I love studying price action. I love seeing markets change, going from high volatility and then contracting into low volatility, as well as when they expand into high volatility into potential opportunity land, and then they contract. There's a point in those moments where there's lots of opportunity for traders to do business. And when the traders are showing up and doing business, it's up to them to decide what kind of these algorithmic methods or order execution or modification tactics they may use so that they can better manage their trades in the environment that is currently present in the market. And this is what trading is all about. Now let's go on to the rest of the video where I'm going to talk about how to set up these trailing stop order types using Trader Workstation. Thank you for watching. Now in TWS, a trailing stop can be set up in a number of different ways. You can set up your bracket orders before your parent order has filled. You can also set a bracket order, a trailing stop, after you've entered into an existing position. You can also set a trailing stop order before you're in any position, so I'll show how to do that now. I'm using a quote monitor in TWS here. I have multiple videos showing how to use this. You can check out one of them right there. So I've dragged in a couple of option contracts here, one option call. I'll also drag in a put option. So now I have a put and a call in the quote monitor. And now I will right click on one of them and I will do sell. Now the way I have my TWS configured is to automatically populate the bracket orders. So what I'll do right now is just cancel that off. So we only have the primary sell order that we submitted. Fundamentally, how you set up a trailing stop is by having an order prompted like this and then changing the order type to be a trail order type. Now there's different types of trailing orders in Interactive Brokers. The trail is a trailing stop, meaning that once the order is triggered, it triggers a stop order. And what a stop order does is it triggers a market order. Now the problem with this for certain markets like stocks is that stop orders are not always permitted in after hours trading, outside of regular trading hours, that is. So to get around this, you should be using a trailing stop limit order type, which introduces a few extra items to the order inputs, which are not that complex because I'm going to explain to you how to use them here. Now, you can use a regular trail order, which, like I said, triggers a stop order. So this is a trailing stop order type. You can use this order type if you are okay with using a regular stop order to exit your trades. Or if you're trading a market that is very thick, that has a lot of liquidity, like futures that trade on the CME or the Chicago Board of Trade, potentially like US Treasuries, ES, NASDAQ futures, potentially. There's a lot of liquidity there, and you're not really penalized for using a regular stop order like you would be if you're trading stock options or US equities. And the reason why you're penalized when you're trading US equities or US equities options is because your orders typically get categorized as taking liquidity when you use a regular stop order. And what that means is it results in higher trading fees, which is not ideal if you trade a lot of contracts. Just keep that in mind. Now, I did another video on how to use conditional orders in Interactive Brokers. You can check it out right here. And in that video, I showed specifically how to use a feature called Post Only to aim to lower your commissions paid when trading US stock options. So if you're interested in that, check it out right there. If you plan to use trailing stops when you're trading US stocks in Interactive Brokers, and let's say you trade longer term positions, like for multi-days, you're a swing trader essentially, or potentially even an intraday trader, but then you leave some trades to go overnight, I would 100% recommend you to use the trailing stop limit order type. Now, the trailing stop limit order type is actually called trail limit, which is a bit of a misleading name for the order type, because you click on the question mark here and then click on find out more. It will bring you to the web page that shows you all of the information regarding this order type. And you will know that this order type, trail limit, is actually the trailing stop limit order type, which is a trailing stop, but it's a stop limit, okay? If you do not know the difference between stop and stop limit order types, you can check out this older video I made that shows how to use a stop order. Okay, so let's start with an example where I'm gonna enter into a long trade on this option contract and then add in a trailing stop to the position afterwards. So let's start by entering a trade into the quote monitor. I'll right click on the contract, click on buy, and then I'll set it to a certain number of contracts, and then I will just select buy. So I'll put in my price and I'll click buy, and I transmitted the order there. Now I'll wait for it to be filled. Okay, so I'm filled on this position. I'm now long 5 options contracts. Let's say I wanted to set a trailing stop order type to this as well as a target. So what I'll do is I'll right click on the order, I'll go to trade, and then I will select the bottom drop down there, and I can do create target stop exit bracket. This is a pretty good feature for attaching a bracket to an existing trade. It saves you the trouble of putting in the orders one at a time and then making sure they're in the same one cancels another group. So I'll click it there and we get brought to this window right here. Okay, now for the stop loss, I'm going to change the order type from stop to trail. And then we have 2 inputs that we need to fill in. So it needs a stop price, but just note that the stop price is going to be changed dynamically based on what you set in the trailing offset. So you can set this to any price. So I can actually go ahead and just set this at, say, 54, doesn't really matter. But what I want to do is set the trailing amount to 0.25 cents. So I'll do 0.25, enter. The orders are set to good till canceled, though this doesn't matter so much because we're trading options intraday here. So I'll click on preview orders. We can see here's our order for our sell, stop loss, trail, our stop price and our trailing amount, and then our profit taker at 121. And you can disable this. This is just an order confirmation. I click transmit. Now I'll close this window for the exit strategy. And we can see we now have, and if you look at our chart, we can also see that our order stop price has actually been adjusted to 68 because I set it to trail 25 cents away from the current price. Now, what's going to happen here is that if the market moves against us, this trailing stop price is not going to move. It's going to stay where it is. If the market moves in our favor, however, the trailing stop price will begin to trail and it will begin to move up as the market moves in our favor. Now, the way I have it set up here is that the stop is a trailing stop from the start. You may not want this. You may want to have a regular stop and then only enable the trailing stop once a trigger price has been achieved. And I'll show how to do that a little bit later in the video here. So what I'll do now is show how to use the trailing stop limit order, which will be more useful if you're trading stocks after hours or if you plan to leave orders in after hours on US stocks or potentially even options for the next day overnight. What I'll do is I'll actually right click this and I'll select close and I'll close my position now for a small loss. My brackets have all been canceled. Okay, so I'm going to do an example with the trailing stop limit now. So I'm going to actually maximize my quote monitor so we see this a little clearer. I'm going to right click on the put option in my watch list, select buy. Here's our primary order. Then I'll right click on the parent order and I'll select attach. This is good if you want to attach your target order and your stop order to your parent order before you transmit it. If you select bracket orders, it'll submit a limit order and a stop order. If you select bracket limit orders, it'll do a limit order and a stop limit order. If you select adjustable stop, then you'll have the adjustable stop feature enabled for your order, which is useful. I'm going to show how to use that next. So I'll select bracket limit orders for now. Okay, and what you can see, look at the OCO group at the end here, and the number is a bit cut off, but Basically, what we see is that the two orders, the target and the stop, are in the same OCA group, meaning that when one of them is filled, the other one is either adjusted to the new quantity or canceled off completely in the case that it's filled right away. So what we're going to do is change the stop limit order type to trail limit. That's going to be a trailing stop limit. And this order type actually has 4 inputs. Note that you don't have to put precise numbers in all of them. You just have to put in the trailing amount. So trailing amount right here. So let's say we want to trail by 25 cents. I'll put 0.25 or 0.25. Then we need to input the limit offset. The limit offset is the same as the limit offset if you use a stop limit order type. The way I think about the limit offset is the price cap on your order, away from the stop price. So if your stop price is at $1, if you set a limit offset of 0.05, it means that when your stop price is triggered, it is going to submit a sell limit order at 95 cents, 5 cents below your stop price. And it would be the same for a buy stop. If it was a buy stop at $1, it would be a limit order at $1.05. Basically, it's a price cap. If you don't understand what I'm talking about here, just do some research and study some examples about stop limit orders and how they work. They're very simple once you understand them. That's everything, I guess. Now, if you go ahead and transmit the order like this, you're probably going to get an error saying no stop price or no limit price. So I'm actually just going to go ahead and put in a stop price anyways. So I'll put in a stop price and I'll put in a limit price as well. And just put them at lower than the market price if it's a sell stop, and put them higher than the market price if it's a buy stop. And then I'll go ahead and transmit everything. And you can see there's my buy order active at 98 cents. And one thing to note is that your attached orders will not become active until the parent order is filled. So what I can do is modify the target and the parent order to be kind of close to the market price. So let's update those now. So I'm filled on one, and you can see that when I was filled, the stop price as well as the limit price were automatically adjusted. So just take note of this, right? The market's currently trading at 129. I put in a trailing amount of 25 cents below the current price. So that means that our stop price would be 106 in this case, and you did see it automatically adjust as the market moved up there. The 5 cents is the offset between our stop price and our limit price. So what this price is here, this 101, this is the price that our sell limit order is going to be submitted at in the case that our stop price is achieved. So if the market has a tight enough spread, like in the case of an option on SPY or a US futures contract, this is going to be perfectly fine, because at the time that our stop price is triggered, this limit price will most probably be below the current bid. So you would essentially be just hitting the bid and getting out. Now I'm going to minimize this, and you can see if we look at the chart, that's what our trade currently looks like. And as the market moves up in our favor, our trailing stop was automatically adjusting. Now, I personally think it's important to use the trailing stop limit order type because it's just a more professional order type. It does have an extra input you need to put in, but it's just a better order type to use in my opinion. There it goes again, adjusting itself to 120 as we see some higher prices in the option contract. Okay, so it's actually not supported to transmit a trailing stop order type when a price condition is true using the conditional order functionality in TWS, because the conditional order functionality does not support stop order types, unfortunately. It only supports limit, market, relative, snap, and I think one other one. Now, one thing that's actually good about trailing stop limit order types and stop limits in general is that you can enable post only on stop limit order types, which means that your orders are going to be categorized as passive. So if I right click on my trailing stop and go to modify order ticket, what's interesting is that post only is enabled on that stop order, meaning that when that stop is triggered, it's going to use a post only limit order type, which would probably result in lower trading fees because it needs to wait to get matched with another market order before being filled. It could also result in a slower fill. So definitely experiment with it and see how that impacts your trading over the long term. I just think that it's good to know about how to use the post only feature. It's useful. So in this case, it looks like we may be stopped out here on this option trade. And since post only is enabled on the option, let's see how this occurs here. If it trades at a price of 126, which is our stop price, it should trigger the sell stop limit order. So it traded 127, that was the last price. Now it traded 125, so we should be triggered here. We should pretty much be triggered. There we go. Our sell limit is active and we're filled at 121. And we're stopped out of that trade using our trailing stop. Now what I'm going to do is go examine the order commission paid, and you can see that on our exit we also paid 56 cents. Not only did I demonstrate how to use a trailing stop limit order, but I also demonstrated that if you use post only enabled, which is supported with stop limit order and trailing stop limits, you could have lower commission fees on your stop outs. Now the next thing I will demonstrate here is how to use the adjustable stop functionality to trigger your stop to become a trailing stop once your trigger price is achieved. So let's work on that now. So let's say I trade the same put option contract. I right click the contract, click buy, create our parent order. Let's say we want to buy 5 contracts. Then I will right click on the order and select attach, and then I will select adjustable stop limit. Now when you attach an adjustable stop limit, the difference that you will be able to see will only be visible in the order ticket itself. It is possible to add the adjustable stop fields to the quote monitor, though I prefer not to do this because it makes it too cluttered with too many columns that you can't read anymore. So what I prefer to do is, I'll start by maximizing the quote monitor. I will right click on our stop limit adjustable stop that we attached, and I will go to modify order ticket. And you can see that when you have an adjustable stop, you see these items here, which are responsible for the adjustable stop settings. So what we do first is we have to configure our stop limit price. So let's say we want to be stopped out if the option goes to 65 cents. Our limit price can be 62 cents, about a 5-cent offset there. And it's the same as setting a 5-cent offset on the trailing stop limit like I showed earlier. I just did it there using a regular stop limit order type. Post only is enabled by default because I have that set up in the order presets. Now what we need to set up is the adjustable stop features. So these are the items we need to set up for the adjustable stop. The first thing is we can choose what order type we want our stop to be changed to once our trigger price is achieved. So if you wanted to adjust to a trailing stop limit, which is my preference, you would select trail limit here. Then under the trigger price, this is the most important field because this is the price that needs to be achieved in order for your stop limit order to be converted into a trailing stop limit order and then start trailing. So let's say the price is 135. Then at that point, you have a few extra fields, but what's really most important is the adjusted trailing amount. Because no matter what you set in the adjusted stop price and the adjusted stop limit price, it is going to automatically change those to be using the trailing amount. So really it doesn't matter what you set here. You could set $1 for both of them. Because once that trigger price is achieved, it should automatically bring your stop order to be 25 cents below the current market price. Now once you're ready with that, we can select accept. We may also want to attach a target to this trade, so I will right click on the parent order and select attach limit, and then I will set my limit price to be 135. Why not? So that means that when my target is achieved, it'll convert my stop limit into a trailing stop limit and start trailing the rest of the trade. So I set the limit price to be 135, but really what I want to do with the limit order is convert it into a scale out order. And when I get to 135, I only want to scale out 3 out of my 5 contracts. So I'm going to right click on that limit order, go to modify order ticket, and then it will bring up the scale trader features where we can choose our initial component size, which is, this is the order size of our primary target. So I'll set it to 3. Means that when it gets to our first target price, that's the amount that it wants to sell. It's going to sell 3. And then the subsequent component size is the size of our other targets afterwards. So we can set that to be 2, which will be the remainder of our trade. Or we can set it to be 1 if we want to have 2 additional target orders. The starting price is the price of our initial order. The price increment is how far away each target is from one another. So if your first target is at 135, if you put a 10-cent price increment, it means your next target is going to be at 145. Once you're ready with that, you can go ahead and select accept. These items for auto price adjustment and profit orders are not applicable here. They are not necessary. These are features that are, if you're going to be using the scale trader functionality potentially as an entry order or as an existing position management order, and research about scale trader if you want to learn more about how that works. So I'll select transmit, or actually I'll select accept, so that way we can now see our orders here. They have not been transmitted yet. I'll change the primary order price, meaning my primary entry order, kind of close to where the market is, and I'll select transmit, and I'll transmit all those orders now. We currently have submitted a parent order to buy 5 contracts. We just bought 5. We have a stop order down at 65 cents. Now, however, that stop order will convert itself into a trailing stop limit order if the market goes up to 135. Now, what we could do is, let's say for whatever reason we want to change the trigger price of the adjustable stop. If I right click on our adjustable stop limit order and go to modify order ticket, it is possible for us to change the trigger price. If I change the trigger price to say $1 and transmit it, now if this option contract trades at $1, our stop limit order should convert into a trailing stop limit order to be 25 cents away, and we just saw that happen right there. Now, what we also saw is that our stop price of $1 was also what the order moved itself to. So that does confirm that the stop price field for the adjustable stop is actually more important than I thought. The reason for that is a little bit complex here, just bear with me, but the reason why it moved the stop to $1 is because I set a trailing offset of 25, but at the time that the trigger price was achieved, the stop price that I set of $1 was less than 25 cents away from the last price. Therefore, it moved the order up to $1. If I had set a lower stop price, like say 50 cents, it would have then put the stop price to be 25 cents below rather than at $1. So the key takeaway with that is that for a trailing stop limit order or a trailing stop order that is triggered using an adjustable stop, the key is to put the stop price much lower than where it needs to be, because when the trailing amount kicks in, it's going to automatically adjust your order to be at the trailing amount. If you set your stop price to be too high for a sell stop, there is a risk that what just happened there happens and the stop order price is at a price closer than the offset you set. In that case, it's just going to stay there. So what I could have done there is I could have moved the stop price lower, and then it would auto adjust to be 25 cents below the current price. The key takeaway for trailing stops is that it's okay to put a stop price much lower than where the market is for a sell stop, because once that trailing stop becomes active, it's going to automatically bring your order to be your offset away from the current price. And the opposite is for a buy order. It's okay to put your buy stop price much higher than where the market is, because when the trailing stop becomes active, it's going to auto adjust your stop price from your super high price down to say 25 cents away or whatever you set as the offset amount. Okay, for buy trailing stops, you can set a really high stop price. For sell trailing stops, you can set a really low stop price, because when the trailing kicks in, it's going to auto adjust it to your offset amount. Got it? So let's go into the order presets just to show some of these items. So I'll select File, Global Configuration, Presets, and then Options, or whichever product you're trading. One thing to note is that I have post only enabled here, and this will apply to any order types that support post only. Stop limit orders as well as trailing stop limit orders support post only, because technically they are a limit order. So experiment with this. Hopefully, if the fills are not too slow, it can result in improved commissions, because your orders are categorized as adding liquidity rather than taking liquidity in the case that post only was off and you submit a marketable limit order. So if post only was off and I submitted a limit sell order below the current bid, it would be considered a marketable limit order, which is pretty much the same as a market order. And what happens with that is when you're trading US options and US stocks, those orders are categorized as taking liquidity, which result in higher trading fees. If you enable post only, you can potentially pay lower trading fees. Experiment with it and see what happens. The other thing is that if you prefer to have the adjustable stop populated automatically whenever you create a new parent order, you can enable it here by going under attach stop order and then selecting adjustable stop for the first item here. If you do not do this, you will have to do what I did earlier and right click on your parent order and select attach adjustable stop or adjustable stop limit. Note that if you select attach bracket orders or bracket limit orders, and then I right click on the stop limit order and go to modify order ticket, the adjustable stop fields will not be there because it does not attach an adjustable stop when you select attach bracket limit orders. You have to explicitly tell it to attach an adjustable stop, and you can do that by setting it in order presets or by right clicking on your parent order and selecting attach adjustable stop or adjustable stop limit. In that case, you will now have access to the adjustable stop and trailing stop fields. So hopefully some of these items can be useful to you in your trading using Interactive Brokers. I want to thank you guys for watching, and feel free to check out this playlist right here, which has many other video tutorials using Interactive Brokers Trader Workstation and other software that they offer. Thank you so much for watching. I'll see you in the next one. Cheers. Take care.